Hi everyone, welcome back to Corporate Decoder, the place where we decipher the corporate world. Today we're diving into a proxy statement, which might sound boring, but trust me, there are hidden gems inside. Think of it as corporate gossip, but with numbers and legal jargon. We will be checking out Xilio Therapeutics, a company working on cancer treatments. The main reason for this proxy statement is for their annual meeting of stockholders where they'll vote on important company matters. Let's see what those are. First, they need to elect 3 directors to their board. These are the people who help steer the company. It's like choosing the captains of a ship, hopefully. They know where they are going. Next, they want to increase the number of shares they are allowed to issue. This is like asking for a bigger wallet in case they need more money. They want to go from 200 million to 600 million. They also want to change their rules to protect company officers from certain lawsuits. This is about limiting the risk for the people running the company. Finally, they want stockholders to approve their choice of accounting firm, Ernst & Young. This is like getting a thumbs up for the person who checks their homework. Speaking of homework, let's take a quick peek at what they paid their homework checker. In 2024, audit fees for checking their yearly and quarterly financial statements were $75,000 to $2,500. Tax fees for advice and planning services were $19,500. It's good to know they're keeping up with their accounting. Now let's switch gears and talk about corporate governance. This section talks about who on the board of directors is considered independent. Being independent means they don't have any relationships that could cloud their judgment. The board determined that all directors except for Rene Russo, the president and CEO, are independent. This makes sense since the CEO works directly for the company. The board has different committees, like the audit committee, which oversees the company's finances. Sarah Bonstein is the chair of the audit committee. Then there's the compensation committee, which decides how much the executives get paid, and a nominating and corporate governance committee that helps pick the board members. It's important for directors to show up to meetings. The report says that each member attended at least 75% of the meetings, which is a good sign. Let's meet the team. Besides the CEO, Rene Russo, we have Christopher Frankenfield, the Chief Financial and Operating Officer, and Katerina Ludtikova, the Chief Medical Officer. Alright, time to talk money. This table shows how much the top executives earned. For example, Rene Russo's total compensation in 2024 was over $1.4 million. Christopher Frankenfield made over $1 million, and Katerina Ludtikova earned about $747,000. We can also see that in August of 2024, Christopher Frankenfield got a grant of options. He got 52,000 securities with a grant date fair value of about $35,000. A good reward after he became CFO. What about the non-employee directors, the ones who aren't company executives? Well, the chair of the board gets 70,000 and the chair of the audit committee also gets 15,000. This part gets a bit technical, but it's about the company's plans to give out stock as compensation. They have a few different plans, including one specifically for new employees. Here we see if there were any deals between the company and people connected to it, like directors or major stockholders. A notable transaction is the agreement with Gilead Sciences, where Gilead bought a bunch of Xilio's stock. This gave Gilead a significant ownership stake in the company. Now, let's look at who owns the most stock. Gilead Sciences owns 17.6%, GKCC owns 13.5%, and Abavia owns 8.4%. So these are the big players when it comes to Xilio's stock. Finally, we need to see if everyone followed the rules about reporting their stock ownership. It seems like there was one late filing, but overall they did pretty well. Now for my overall take on Xilio Therapeutics. They appear to be in a period of transition marked by strategic partnerships like the one with Gilead and Abia. These partnerships provide crucial funding and validation of their technology. The increase in authorized shares, while potentially dilutive, is a common move for growing companies to give them flexibility with financing and acquisitions. One thing to keep an eye on is their spending. Are these partnerships bringing in enough cash, or are they constantly trying to get more money? Ultimately, Xilio's success hinges on their ability to successfully develop and commercialize their cancer treatments. And these are, after all, highly uncertain. Car things for you, so if you enjoyed, please subscribe, like and comment.